big driver, the big problem with real estate is really probably 70 years of artificial manipulation of real estate prices.
One of the biggest megatrends in real estate is exactly that, is the idea of taking the incorporated village concept and extending it to purpose-built, masterly designed communities where people identify whom they want to live with and how.
But I think with crypto, the interesting thing is that you have fractionalization. I see a model with liquid co-ownership where you could very easily, come into a place of, incentive and have investment into the success of the space.
For our purposes, what we've done in the US is that we use a California trust that holds title of the properties that we facilitate putting on chain.
Welcome everyone to today's podcast. I'm Praveen, your host. I run marketing here at Mattereum, and today we are diving into the fascinating world of real estate tokenization. Real estate tokenization involves converting real estate assets into digital tokens on a blockchain. Let's take an example. Real estate tokenized on Ethereum would make the buying, selling, and investing in property more accessible, transparent, and efficient. Today, I'm joined by experts in the real estate tokenization space on this podcast to discuss this and the opportunities it unlocks for the community at large. Joining us first is John Belitsky, Chief Strategy Officer and co-founder of Balcony DAO. John, could you please introduce yourself and tell us a bit about your background?
Yeah, so we're no longer Balcony DAO. We have transitioned to Balcony Technology Group. The early stages of our product featured something very similar, I think, to what Federico is doing at Fabrica, which was a way to transact real estate on the blockchain. Since then, we've iterated backwards because what we encountered was a real lack of primitives that supported the ability to actually transact completely on-chain. And so we're now sort of solving the problems that I think will allow people like Federico and his company to actually transact completely on-chain with the highest quality fidelity and actual government involvement with the transfer of title and deed for real property completely on-chain. So today, Balcony Technology Group, or Balcony, we just call ourselves Balcony, has been working in the state of New Jersey, New York, and Wyoming, bringing actual governments on-chain, bringing their workflows into the 21st century so that things like fractional real estate and DAOs can exist inside of this asset class.
Interesting. That we'll definitely be diving into greater detail on what Balcony does with tokenization of real estate assets. I've seen some of your previous speaking gigs, and you have covered some very interesting ideas over there. So we dive into that as we go along. Next, we have Federico Pomi, CEO and founder of Fabrica. Federico, could you introduce yourself and share a bit about your journey into tech and real estate?
Yes, hi everyone, and thank you for having me on the show. It's an honor. Well, I'm Federico. At Fabrica, what we do is that we bring real estate on chain. So we tokenize real properties, and specifically we are currently operating in the US with undeveloped plots of land. So we take real land deeds and turn them into digital assets. What can you do with those assets once they are on chain? You can trade them, so you can buy and sell properties, you can borrow against them, and you can use them as digital primitive into any on-chain application. So they're standard tokens. We have taken a very serious take and approach at this. So we have worked with regulators. We have over 20 licenses to operate in the US as a title agency, escrow company, real estate brokers. And we are operational in all 50 states with over 400 properties now on Rampton chain.
It's very interesting. I believe that's one of the key aspects of real estate tokenization, the regulatory alignment and access to the compliance factor. I think that's one of the areas we'll be touching upon quite deeply over this conversation. But before we do, a quick introduction to the OG, Vinay Gupta, CEO and founder of Mattereum. Vinay, a quick introduction.
Sure. Mattereum got started 2017 to try and solve the kind of legal enforceability of smart contract problem. And as times have changed, it's become increasingly clear that real estate is probably the most valid long-term economic use case for the blockchain. As we say to people these days, why is it that the world's largest asset class, real estate, doesn't have a global electronic exchange? And when you say that to folks in TradFi, there's just this long pause and and the other thing that I find, when I'm talking to people about this is like, hey, you know how we used to do stocks and shares before we started doing it with computers? Stockbrokers, stock jobbers, all of this paperwork, these huge bundles of paper, and then all the people on the trading floor with their funny-looking hand signals for all their things. And, that's basically how we do real estate. We haven't changed real estate since those things were normal. As a result, unsurprisingly, there's an enormous amount of efficiency gain to be had in real estate. And I think that this is, if we look at the world as a whole and say, okay, where does the blockchain fit in the next, say, 10 to 15 years, 100% of real estate transactions being done digitally is just the same transformation time that it took for 100% of stock transactions to happen digitally. That's just what happens. You digitize a new asset class, everything changes.
Well said, Vinay. That's why I love you. Very articulately put. Couldn't agree with you more, my friend.
Yeah, same here. That's basically. I recorded that. I'm gonna use it for fundraising.
Oh yeah, please do.
Best pitch for our company.
Yeah, do it. Absolutely. Very, very happy to help. Right? Because all of this stuff, right? Like, the blockchain space as a whole is really underplaying its hand, right? All this stuff of like, oh, we're gonna, fight and we're gonna starve the governments of taxes. No, we're fucking anarchists. Like, all technologies go through a phase like that. And then a bunch of middle-aged dudes wind up taking the damn thing over and turning it into something that looks exactly like the old establishment. That's us.
Look, unfortunately, I think that's an accurate assessment. That's basically the life cycle of technology and disruptive markets. I think with our particular industry, real estate, it could never, ever be more true that this fever dream of decentralization was just absolutely inane. It's a centralized asset class. It lives at a specific address. It is subject to a specific jurisdiction. It can 100% be censored. Somebody could kick in your door and steal all your stuff. It lives in a single place. And so this idea that we were going to create digital twins and there was going to be this alternative approach that was tangential to the existing system was completely unproductive and silly. And so I think the world has kind of woken up to that. And here we are, right? We're building stuff that actually works, that conforms with regulations, that galvanizes property rights, that reduces the threshold for these transactions to happen, the pain and the inefficiencies. And that's what we should be doing.
Yeah.
Grown-up stuff.
And, the way that
if I may, there were many conversations that I've had lately that were around kind of like the evolution of the industry. You see, at the beginning, it was totally virtual assets. And then after that, it was kind of like financial assets that are still kind of like etherical. But now the hard stuff, as you said, John, is like, how can we touch like the bricks, like the stuff that is in the real world? And I think that's the step that the industry has not really made yet because it's a little bit harder. But that's what the blockchain needs to do to be actually to have effect on the world. At least that's how I see it.
Nelson, I just realized we didn't introduce you. Who are you?
I'm Nelson, come of a technical background. I've been around Mattereum for many years now. I've been working with Vinay and for Vinay for 2 years now. My interest around real estate is mainly focused around land regeneration and smart villages, and how to use the tokenization to create those new, as you said, John, those new primitives that allow us to create new ways to live together, essentially. So how can we use the technology to actually regenerate land, but then build, buildings, live together, and have healthier societies, essentially, which I think we can use this modular tech to do.
What got you interested in this? You seem to have like a kibbutz-style, community-minded kind of foundation to how you're looking at this. I'm interested in just knowing, is that sort of the motivation?
Yeah, I can take a long story and shorten it, but basically during the lockdowns, I was actually stuck an hour and a half from Barcelona, in one of her friends' yoga retreat in the middle of nature, and it was fantastic. But then the idea to live like hippies was kind of like, it doesn't really work. It doesn't scale. Communes don't work for me. But then, could we do that in nature where people could have their own pod, and then we can have third spaces, we can have buildings in common that we manage together in nature, but high tech with, high speed internet, and have all my crypto friends live around me, essentially. And now that I have a kid, it's even more true. Like, how can we arrange to live around healthy communities, but healthy, to me, healthy, there's three main domains. Ecological, you need to live in a beautiful place that you can have food and everything. Sociological, good governance, good ways to interact together. And economical, it needs to be thriving. I want to have ambitious, nerds, researchers, entrepreneurs. I want to have interesting companies being built, and I want to have income flow into the economy. And I think it's very possible. One of the inspiration towards my vision was Black Wall Street in the 1920s in the United States. So that's kind of like the way that I think about it. And I think villages are the perfect model. There's millions of them around the world. They work. You have your house, I have my house. I can do what I want in my house, but then in the streets we can decide of common rules that we use to manage things. That's what I'm quite keen on exploring.
I think that's one of the biggest mega trends in real estate is exactly that, is the idea of taking the incorporated village concept and extending it to purpose-built, masterly designed communities where people identify whom they want to live with and how. And I think that's going to actually expand into legislative processes. I kind of been talking a lot about this on Twitter. This is sort of like the balkanization of America, where there's so many people who are looking to own a ranch, build one of these communities. And the stuff that we're doing in this space, tokenization and the ability to fractionalize and have co-ownership of these things, I think is going to absolutely fuel that, and it's going to explode. So it's really cool to see you doing that work.
Yeah, and absolutely. The way that I approach it, you can look at existing models, but they are very static. They don't really work. It's like a huge barrier of entry. Entering a co-op, then you're stuck there for 20 years. But I think with crypto, the interesting thing is that you have fractionalization. I see a model with liquid co-ownership, where you could very easily, come into a place of, incentive and have investment into the success of the space. So, if you succeed, if you make money, we all benefit from it. But if I want to live, I can also live very easily, and I'm not kind of like forced to stay in a situation that doesn't work for me, because if it doesn't work for me being there is not going to work for everybody else. So, I can go from Barcelona to New York. I can go from New York to Costa Rica. I can go from Costa Rica to Italy. And I think we have the tools now with, the genius in tokenomics that we have in the space to create those kind of primitives and protocols to do it.
Mm-hmm. I believe the tokenization of real estate is one of the areas. As we dive into it, we are going to discover more opportunities. And Nelson, like you correctly mentioned, the decentralization and the flexibility that it offers is a key factor we'll be diving into. Just to set the stage, why is one of the world's most desirable asset classes one of the most challenging asset classes that we don't see enough of on the blockchain?
Well, so, the big driver, the big problem with real estate is really probably 70 years of artificial manipulation of real estate prices. We're in a position where everything else is getting better and cheaper and better and cheaper and better and cheaper. Really, from the point where we kind of decided the world was going to have a 2% interest rate and that's just how money was going to be handled, there has been an expectation that most people in America, the UK, and many other countries will own their own homes. And this combination of low interest rates and incredibly powerful lobbying to keep house prices going up and a lot of manipulation by governments has left us in a situation where people are paying 30-40% of their income for real estate, and they're getting mortgages that are 5 times their salaries when the historic norm was typically 3 times. So it's become a core economic choke point for the entire system, and it's seriously impacting things like birth rates, right? It's just very hard to have an incredibly expensive real estate regime, and for people then to afford to have kids. So the position that we're in is that we've got a massively indebted younger generation from things like student loans. They're not going to go into the real estate market as buyers and sellers unless something radical shifts. And we're already seeing the implosion of commercial real estate, with some buildings changing hands for 10% of their previous valuation. So we're in a position where there is just unbelievable, dramatic, mega trend change in real estate in countries like America and Britain. We know that by 10 years from now, 5 years from now, things will have changed out of all recognition. Nobody knows what direction we're going in. So that opportunity in this time of massive turbulent transformation to also fix how real estate is bought and sold seems like a natural time. And then you basically sandwich the problem between two technologies. Blockchain for all the document handling, and AI for spotting problems in documents, for looking at images and telling you what they say, for taking 60 years of paper documentation of some house and then crunching it down into some kind of meaning. There are all these places where just the paperwork burdens moving real estate from a paper system to a digital system. If all of that stuff was going to be done by hand, it was going to be very, very expensive and difficult. But you put AI into the mix, and the actual heavy lift, I think, is going to be easier than expected. And then on the other side of this, if you've got really good, trustworthy data about real estate, the other thing that you get out of this is AI search. I want 3-bedroom house in Florida within a 40-minute drive from my mom's place, and I want a 25-minute drive to work. I want it to be close to water. I want it to be close to a golf course. And if possible, I want a south-facing backyard. Right? You give those as instructions to an AI system, there's a decent chance it can come back with recommendations from millions of scanned properties, and they'll be about 80, 95% right. And you're not going to make a buying decision just because the AI said so, but as a search tool, it's probably fantastic. So I kind of feel like this kind of digitized real estate environment for buyers will be so much better than anything that they've got from existing options that it'll be a one-way thing. It'll just be like, oh, well, of course, we're never going back. And then the market will move, and then it'll just be like, why did we wait 50 years to digitize real estate? Oh, because you needed AI.
Also on the side of the offer, okay, people are looking for that type of asset. And then for the developers, it would be easy, okay, I need to create an asset that fulfills those conditions. How can I do that? And then you would have the AI kind of find a plot of land and the orientation and the position that would fulfill this. Has to be an hour and a half from an airport. Has to have that orientation. That's interesting to see. It's a buy and a sell.
And the opportunities that emerge out of the integration of AI depends on the veracity of the data that it can access, the validity, the accuracy, the timeliness of that data. And speaking of desirable properties, we're lucky to have John, who actually calls home one of the world's most desirable places to own property. John, could you take us a little bit into your journey being an industry insider who knows how the machine works, the old school machine works? You have played it, you understand it. What motivated you to pursue the blockchain, and why is the blockchain one of the areas where you feel true value can be unlocked?
Wow, great question. So I started my career in real estate when I was a teenager in the Bronx. Wow. And I was selling multifamily properties, converting them to Section 8, basically to get the highest obtainable rent, which was not market rate, it was subsidized, and then selling those properties. Back then, to Vinny's point about the financialization of these assets, you could buy a building in the Bronx for 4 times the gross rent, so 4 times gross rent multiple. Today, you're lucky if you could get it for 10 or 12. And so from there, I went into Manhattan, started doing commercial real estate with a company called Murray Hill Properties, which was positioning office buildings, Class B buildings in A markets through a fund that we did with ING to purchase about $250 million of real estate way back in the day. And throughout this entire process, I'm using the Blue Book. The Blue Book was basically an encyclopedia that printed every property owner's name, address, and phone number and the name of their LLC. And you would go and you'd leaf through it and you'd find somebody, call them up and say, hey, we want to buy your building. And one of the reasons why you worked at a brokerage is because they had telephones and they had Blue Books. And both of those things were expensive to operate back in the day. And the entire time I'm doing this, I'm thinking, this is the most arcane, absurd process anyone could ever imagine. You're moving billions and billions and billions of dollars of bricks, and you're doing it with a horse and buggy. Even back then, even in the 90s, it was absurd then. At the same time that this is happening, my father is a computer programmer. And when I grew up, he taught me cryptology. When I was 7 years old, we started grabbing my Dr. Seuss books and making ciphers so that he could encrypt his terminal at work at Dean Witter Reynolds in the World Trade Center. And so I grew up around this idea of cryptography, about this idea of privacy, about this idea of ownership. And it wasn't until Bitcoin came out that it started to really click for me. And particularly at the Occupy Wall Street movement, I saw these guys, with these signs that said, send us $5 for pizza. And I'm sitting at my house in New Jersey, and I'm like, well, these guys got it all wrong. And I jumped on the subway. I went downtown to Zuccotti Park, and I was like, you should accept Bitcoin. And I started breaking down why Bitcoin is a better solution for what their objective is, which is to disrupt this financial market and to assert some sense of autonomy in a financial system that they feel had disenfranchised them. And they didn't get it at all. And I figured if these radicals don't get it, no one's going to get it. And I kind of put it down for a while. And then around 2018 or so, I started building arbitrage systems, just writing Python scripts because the exchanges were all goofy and you could still clip some arbitrage value out of them. And one day my script broke and I got stuck with Bitcoin, and I realized I'd much rather have it than not have it. And then I started starting to apply the principles of Bitcoin to real estate. Fast forward to 2020, pandemic hits, and with all the time on my hands, I started writing this application called The World. And the world was, if God was a programmer, what would the world look like? And so I took this reductive approach to Earth and said, if I apply object-oriented programming to every single asset in the world, what does that look like? And so this sort of new schema for categorizing the world emerged. And you realize the world is just a piece of real estate, and states are just these synthetic jurisdictions that are placed upon them that determine these arbitrary borders. But the real estate is real, and the real estate needs to be the highest order data object in a intelligent reconstructing of the digital architecture of the world. So I started building this thing, and I started talking about it a lot, as people in our industry do when we start doing things in this industry. Mm-hmm. And I was introduced to my co-founders who were thinking about the same problem, property developers from Hoboken, New Jersey. We got together and we started Balcony DAO. And the idea there was to purchase these properties, make them liquid, fractionalize them, allow for a completely liquid capital stack, as Nelson was alluding to earlier. And the problem that we bumped into was you couldn't really do it with the primitives that existed. And so we decided that we had to infiltrate the government, bring the government onto the blockchain so that the substrate of this entire industry operates digitally and operates within this newly structured digital architecture that is effectively object-oriented programming with the capital asset as the highest order data object, and everything attaches to it.
This is quite interesting because, this is not the first time that governments made this transformation, right? The last time government made this transformation was when it moved on to print. You went from pre-written forms to written forms really not that long ago. And then there was another huge transformation when we went onto printed documents, and we got things like copiers and written law, and then printing, books of law, this kind of stuff. One of the groups that I work with quite a bit is City London Corporation. So City London Corporation is roughly 1,000 years old, a little bit older, into antiquity. Exactly when you pick its starting point is a little bit kind of here and there. But it's the thing that runs the square mile, the City of London. And they are regularly doing 100-year contracts on land, and they're regularly getting land back because a 100-year contract has expired, and now the land goes back to them, and then they write another 100-year contract. They've been at that model for 1,000 years. This is this weird UK thing, leasehold, freehold. So the notion
Can you explain a little bit more? Because I don't think most people realize what the City of London Corporation is exactly.
I'm not even sure I realize what it is. I mean, for all intents and purposes, there's a square mile of London, which is within the wall of the medieval city. And that is basically like a 1,000-year-old special economic zone. when the UK regime that currently runs the country was installed in 1066, they retained a certain set of independent rights as a result of their having a big wall around them. And to this day, they operate in a way which is, I don't want to say quasi-independent, but it's almost like an internal SEZ. They're going to throw rocks at me now because I don't think they like being called an internal SEZ, but it's kind of like a 1,000-year-old SEZ. So that as a model, right? This idea that you've got a 1,000-year-old local government that's continuing to evolve how it does land deals, dealing with a 1,000-year-old entity that's doing technology commissioning has given me a real sense of like how government sees the world. Not the 4-year electoral windows, which are very short, the politicians tend to be real short-sighted, but the bureaucrats that actually run these things long-term. And I absolutely agree it's inevitable. But there's also so much that can be done with things like special purpose vehicles and contract law. There's a lot of room for taking the existing legal norms and working with them as a kind of stopgap until we get fundamental change. Mattereum is very much kind of SPV based. Fabrica, I think you do something mostly with trust law.
Correct. So we don't use traditional SPVs. We use trust to hold title, but the setup is pretty much the same, wrapping the title into some sort of entity that is recorded with registered with a local jurisdiction.
Could you unpack the trust thing a little? Because I have a kind of semi-decent understanding of the SPV thing, but the trust thing is an old friend, Ian Grigg, the guy that invented the Ricardian contract, is working with an outfit called Hover Trusts right now, and he's very enthusiastic about trusts. And usually when Ian is excited about something, it takes me about 3 years before I understand why I should be excited too. So I've got the kind of the trust flashing signal. It's like, trusts are really important. Ian Grigg says so, but I don't really understand. Could you teach us a little bit about trusts?
Well, trust is a very old form of contract between two people traditionally, and they were invented during the Crusades. I think when people were going to fight for religion purposes, and you would basically give your assets to someone to hold them as a trustee for the time you were out of the country, and basically say who the beneficiary of a trust would have been. So if anything happened to you, that person would have taken your assets. So over time, they developed into a very powerful and flexible instrument to do several things and hold different kind of assets. And they're used worldwide. The UK obviously has the longest history of this, but they have been adopted in every single country in the world. And you can basically design a trust as you want and set up the rules of a trust. And for our purposes, what we have done in the US is that we use a California trust that holds title of a properties that we facilitate putting on chain. And basically the trust is pretty simple. It says hey, I trust, so to speak, own the title, the property for all the meaning of the local jurisdiction. So the title is in the name of a trust. But the crucial point is that together with the trust, a token is minted and given to the original person who set up the trust. And from that moment on, whoever gets in possession of a token basically becomes the trustee and beneficiary of a trust. In simple words, if you are in possession of a token, you own the trust that owns the property. So the beauty of this approach is that the local jurisdiction, the property stays in the name of a trust. What changes is who is behind the trust. And that is directed fully by the token. So you can use that token to do transaction fully on chain instantly, or you can use the token to borrow against those properties, since you can take the token as a collateral. And you can create fractions of those tokens, and then you have fractional ownership. And you can use it as a digital primitive on chain and build on top of it. And basically we're making real estate programmable this way.
Is the token a bearer asset for the beneficiary?
In a sense, yes, it is. So it's very close to a bearer asset, yes.
And is it not regulated as a security if it's a bearer asset? I'm just curious.
I love the question. I think it's spot on. No, it's not a security for simple reasons. Currently, one token represents the entirety of a property, and it's like personal property. It's like owning a house or a plot of land, and it doesn't necessarily imply that there is a business making revenues on the property. It's pure ownership of of an underlying asset, nothing more. So it's
Okay.
clearly not a
So
security.
just to double click a little bit more on that. So
Yeah.
if the tokens are bearer assets and you can individually transact them, is each individual unit hypothecated with only several and not joint liability for debt? Is that how that asset flows?
So currently it is one-to-one with the title. So that the token represents full ownership of a clean title at the county. And more technically, the token represents both the beneficiary interest in the trust and it makes you the trustee. So in a sense, it's a fully pass-through entity to own the title. It's almost like a name holder at the local jurisdiction, nothing more than that. So it's a way to bridge the legal traditional system with something that is on chain, saying, hey, just look there to see who is the actual owner of a property.
So when you transfer title of a property, you require that title be transferred with no mortgage on it, and then individuals can individually hypothecate their beneficial interest for the purpose of financing their acquisition, but the capital asset has to remain unencumbered.
Correct.
Right?
That's correct, yes.
Got it. Cool. But one day that'll change, right? One day people will find ways to create hypothecation specifically for trust if you're successful with this, and there'll be new financing schemes available for it. But it's a clever approach to it for sure.
Thank you.
You just reminded me, it's actually like a DNS system, right? Like, okay, you have the asset that points to an address, and the IP, let's say, is the token holder, but then the trust itself is kind of like the bridge to pointing towards who's the owner of that asset.
Yeah, exactly. It's like pointers. I mean, all this kind of stuff, the lawyers for very large deals, if you take $100 million mall complex or something like that, almost all these things exist in the world of fancy law and serious investment in the legals for deals. So most of these things, there's some way of doing. This is really complicated and really expensive. You need a fancy law firm to do it, but you can do it. As we begin to get more automation of law, standard template contracts, blockchain smart contracts, arbitration, heavy use of insurance to bridge little gaps, there's lots of kind of ways of bringing the cost of a complex legal structure down with modern technology, and that before we get to AI. Being able to pull those fancy suites of technique down for smaller deals, I think, is also one of the big benefits of these kind of approaches. Like trust structures for storing real estate, you sort of think like, oh, that sounds complicated and expensive. But you guys have gotten this stuff down to, what's the cheapest property you've ever sold on the platform?
So we have seen properties like as cheap as $500. So plots of lands in the desert. It's really that's cheap.
Really amazing.
And which is like, in a sense, it's like, what is it? But it's like, that's the power of it. Like we lower the price and the cost structure to spin up a trust instantly. That is so low that you can do it on any property. And we've done it with like very cheap properties and super expensive properties. So it's pretty flexible as a tool.
And
it's
speaking of flexibility, Federico, one of the things I've noticed the community engages quite often on social media, for example, is the potential composability that Fabrica offers. Usability, the access and democratization, of course, opens up new avenues, but it is also the unique ways in which ideas can evolve that you haven't even imagined yet that allows people to play around with this asset class. Any interesting use cases, scenarios that you might have encountered during your journey?
Thank you, Praveen. No, and that's something that I wanted to double down on what Vinay was saying earlier. Like real estate, basically, the way to unlock it is, on one side, AI is going to help a lot to analyze the data and help you with search and understand the context, the legal context of properties, and that's a very powerful tool. The other side of this is like making the operational sides of a transaction much, much cheaper and faster. And that's the important thing that I want to stress. It's not just about the transaction. Yes, you can make a transaction from one person to another faster and cheaper. That's a nice, good start. But the reality, the real power of that is that by making operations much cheaper, you unlock the innovation that you can do on those assets. So if the transactional cost are in the cents of dollars instead of thousands of dollars, all of a sudden you can start to think creatively about those assets and say things like, hey, I own this house. Can I use 0.001% of it to do something like buy a coffee, something like that? It would be like crazy impossible to do with traditional legal paperwork. All of a sudden, since it's a digital asset, you can treat it as such and perform operations that are unthinkable or were unthinkable before. So that's, I think it's extremely interesting. To your question, Praveen, we're currently seeing a few people and projects experimenting with real properties. So we have a couple of DAOs who own properties on Fabrica. So as DAOs, they agree to buy a specific NFT or the token that represents the property. And so the DAO, the LLC, became like instantly owners of these properties. Some have improved the property and like are now for sale. Some have farm. Others are investing basically in properties to have a portfolio. Some people we see have some very long-term strategy on climate change. So they're saying things like, hey, we believe that Florida is going to be less valuable in 20 years, while some remote region on northern America is going to be more valuable and nobody buys better. Let's
20
properties
years?
there.
20 years? I was going to say like 2 years.
Yeah, well,
they are getting hammered right now. This crisis about insurability in Florida, they're having problems. They can't get house insurance. Nobody's going to insure them for flooding. I was on a couple of calls recently with American groups doing civil resilience stuff in Florida. They are getting hammered.
Yeah,
it's crazy.
But the interesting thing about it is, I think that like some people are starting to think really long term and say, okay, we want to acquire those property and just hold them. And in some places are like you say, why? What's the thesis there? And then maybe there's some AI research or some long-term thinking, and they're starting to bring those properties on chain. They'll say, okay, let's put them there and create our portfolio natively on chain, which is very interesting.
Yeah.
For our listeners who are wondering where John is, he had to drop off for another call. We'll get him again on another episode. But yes, Vinay, please finish your thought.
So I wanted to talk a little bit about the recent stuff that's happening in America on transaction costs. Because, I mean, to me, if there is a thesis for crypto, it's low transaction costs. That crypto as a technology versus like Bitcoin as a currency, there's a whole historical mess. Bottom line is that in America, since really the beginning of time, it's cost a standard 6% as a commission when you do a home deal. You have to have a realtor in the middle. In most cases, when you do the transaction, they take 6%. So, you're doing $1 million home, 60 grand goes to the realtor. They don't have to sell many houses in a year to be making a pretty good living, right? So there was a large scale push on this, right? Huge lawsuit, massive shift in the legal situation. And what this enables now is price competition among realtors in the States, right? In an average year, something on the order of $2 trillion worth of real estate is transacted in America for, kind of individual single family home type things. So the potential pool of money that is now in the wind on this is on the order of $120 billion. And it's kind of like, you could run like real companies. You could run entire industries off $120 billion a year of savings. And more generally, there's some similar legislation in the UK that enables container shipping to do all of its paperwork on the electronic systems, including blockchains. The UK government's own estimate is that has 220 billion pounds of savings a year, which in dollars is $285 billion. So, the number that we kind of kick around is that there is basically $500 billion of savings to be had on chain. This much in shipping, this much in real estate, there are a couple other use cases. But 5 years ago, that 6% fee was locked in iron and was unthinkably unchangeable. And now it's gone. And at that point, may the most efficient system win? Is that finally the unlock for real estate in America to go from a few hundred things listed to a few tens of thousands, and then a few hundreds of thousands, and then a few million? Do you think that's the accelerator?
It's a good question, and I'm very curious to see what's going to happen. Clearly, as we are seeing the news there, what I think is that, yes, it will lower the fees for home buyers and seller. I'm not sure how big of a change that will be and how long it will take, because it will take a lot of time for the status quo to really start to compressing those fees. And keep in mind that there are like additional fees that you're not seeing that are on top of the real estate agent. So you have like title agents, title insurance, and there's a lot that makes a lot of components that make these transactions so stiff. And so the innovation that we can bring, really, it's not just on the real estate fees, but it's in the whole process.
Yeah.
And the other thing that I want to add, back to my point earlier, is that those fees are fine if you're looking at valuable assets. It's expensive, but in many cases they're like kind of fine. When you look at less valuable assets, you have a fixed price that you need to pay that makes those transactions impossible. If you're looking at a small plot of land that it's worth $50,000, all of a sudden the fees are not 6%. You're gonna pay like 20% on the transaction.
Right.
That's a real showstopper for a large segment of the market. To give you context, in the US, there are over 150 million plots of land are like stuck there. So it's a large market.
Whoa, that's amazing. Wow. One plot of land for every 2 people.
Yes, right, you're right.
Yeah.
Nelson, you are one of the familiar faces of Mattereum doing the event circuit. You have the opportunity to interact with many communities, many builders, developers, community members. Any insights on real estate challenges that you have encountered in your interaction so far that also correspond to your own ambitions and visions for, nicer and a more pleasant and flexible way of living? One of the things I'm sure you must have noticed in your interactions is decentralization and blockchain as a technology is also encouraging remote workers. And one of the unique things that you get when you tokenize real estate, land and apartments and homes on chain is that you allow remote digital workers to relocate wherever the heart takes them. What stories, opportunities do you think the community would love to see from real estate tokenization?
To me, one of the points that I mentioned earlier is kind of like key. Is like, how can you ensure that the people contributing just by their presence, just by bringing, their families, their businesses, their funds into the economy and contributing to the health of the place itself, how can they also benefit from the upside if one of them succeed greatly? Because very often what you see is like somebody owns the place and others are like kind of like subservient to that. Either they're just like guests or they're like renters, and there's a little bit of disequilibrium into the power relationships. Like, if I'm not incentivized to make the place better because in some sense I'm not owning it, why would I do it? And I can do it up to a certain point, but there's a limit to that. So I really see into the technology that we have, one of the key things that doesn't really exist yet is like, if I could be part owner, but not in a way that locks me forever, because as you said, people like to live remotely and be able to be there at some point and then maybe go somewhere else because their life evolves. People go to some place and find a mate, find a partner, have kids, and then suddenly, the environment that they are in is not probably the best place to grow kids, and they have to go somewhere else, maybe more suburban. So that way of like, I'm able to fully contribute, to fully be engaged in the community, and then live in a way without damaging the community, without damaging the economy so much, but then bring some of my chips, some of my yields, some of what I've contributed to the space, and bring it somewhere else, and have this flow, constant flow of people, of assets between countries, between continents, between communities. So I think that's one of the key aspects that is missing. But if we're talking about our industry, I think there's really a gap still in most people's understanding of real world assets, and they still see it as very difficult to actually touch the bricks, to actually touch the real estate. It's not necessarily that they don't see it as possible, but it's the industry is still nascent, and I think it's quite exciting to see that happening. And I love what Federico is doing, what John is doing, because it's kind of like breaking those barriers and showing that it is possible to bring those very simple, those primitives, those prime assets into the chain, and then what could we build on top of that is very exciting. We haven't really talked about that, but also land regeneration is a big aspect. We talked about climate change, but besides just moving from Florida to somewhere else, could I actually take a undervalued, desertified place? I've been in Portugal for a couple of years. Now I'm in Barcelona. Barcelona is going through one of the worst droughts in 100 years. When you drive to the center of Portugal, you just drive around and you see the soil. It looks like death. It's kind of like this gray, weird thing that you know that nothing is growing on top of it, partly because of monoculture. The interesting thing is like we have the technology to make it better. So could I invest? Could I put some money in? Could I put some crypto in? Buy some asset, regenerate it, raise the value, make it a lush oasis, and then maybe build something on top of it, or just run it as a business, as like agriculture business, right?
Absolutely.
And bring some yields to it. So that's the way that I see that will be really key, is like building those land regeneration protocol or those liquid co-ownership protocol that allows people to be invested not just in ethereal abstract assets, but like in actual land.
Yeah. And I think the possibility of thinking of blockchain technology as a force of good to not just create sustainability, but also to revitalize areas, and in ways that Federico also touched upon, with even desert land, there is always desire, there is always potential, and folks, once given the avenues to explore those opportunities, might just reveal new innovations and possibilities that many of us are even yet to imagine. That said, we are recording this podcast on the heels of some very euphoric news in the community. ETH ETF approvals, or at least the start of it, has got everyone cheering. And you mentioned very interestingly, Nelson, how many folks on blockchain cannot touch real world assets. And that is one of the unique things that I think Vinay has had a front seat view to, since he has seen Ethereum in its nascent idea stage evolving into the juggernaut that it is today. Vinay, I think this will be a great opportunity for you to speak about how Mattereum helps Ethereum connect and interact with real world assets. There is so much about the ethereal land of innovation and ideas that Ethereum has evolved into and continues to grow into. And there is this real world that is waiting to connect with Ethereum, and those within Ethereum want to connect with it. How do you see this playing out?
So the bottom line is that getting real world stuff done is super, super hard, right? I mean, Fede, you talked about having operating licenses, by the dozen, and 50 states, all the necessary machinery for operating. All of that stuff is infrastructure, right? So if other companies wanted to enter this kind of real estate space, they either have to go and get all of those licenses themselves, or they have to send their deals to you, and then you run the deals and you guys split the margin, right? And that sort of notion that the early actors build infrastructure for everybody else, and then you wind up with a handful of large companies that basically run the transactional backbone for everybody else. This is the same architecture you got in the .coms in Web 2 with cloud. Right? Mm-hmm. But in blockchain, the thing that you wind up needing to do that way is not cloud, it's lawyers. Right? The scarce resource in the blockchain, the expensive resource in the blockchain is not transactional space. That's the thing that the blockchain provides, is the transactional machinery. The scarce resource is the legal bindings to get the things on chain and then moved around, because that turns out to be the hard, difficult part of doing blockchain stuff. At this point in history, if you got, 24 nerds in a room for 6 months, you could come up with a pretty decent plan for an L1 chain. But if you want to try and transact, a bicycle legally in 12 different states in America, you bring $2 million and you wait 2 years. It's a very, very big jump. Right?
Vinay, that's so true. So we have been refining our trust instrument for 6 years now.
Yeah.
And we have spent a ton of money in lawyers. We have a full-time real estate attorney. It was our first hire, of course, and we have worked with so many firms. We got to a point where we think that should be something that other people can use, and we open sourced it. So we have taken our trust agreement and open source. You can go on GitHub
That's amazing.
and download it and use it for other assets.
I did not know you had done that.
Yeah, we released it last month.
That's fantastic. Well, congratulations and thank you.
Thank you.
From the rest of the space, I thank you. Not enough people know that you did that. That's fantastic.
Amazing.
Thank you. And the idea is that other companies should use it. This is we're talking about bringing a $300 trillion asset class on chain. It's not going to be us alone. Yeah. So please join us. That's the homework we've done so far. Someone please come up with some idea to solve another issue, and we'll collectively make it happen. And it's can be land, it can be residential, it can be commercial, it can be other assets you're doing metals and so on. People are tokenizing watches these days, and we're doing it with very basic primitive. We're telling them hey, why don't you use the trust?
Yeah,
and
absolutely.
You can use the trust for small objects.
And if you could do a $500 piece of land on the trust, doing a $40,000 watch should be easy.
Exactly.
Yeah.
And
so
go ahead.
This kind of thing, right? Mattereum, we did the work on the arbitration stuff, all the Ricardian thing. A lot of the concrete fruit of that was the UK Jurisdiction Task Force Digital Dispute Resolution Rules. And that came out of, lots of people working for years. We held some conferences, we contributed some of the rules. Claros were involved, lots of different people were involved in those rules, as well as lots of time from the law firms, Society for Computers and Law, the rest of that. But at the end of that, there's a legal document of 15 pages of rules for handling disputes over digital assets. And that stuff is invaluable to anybody in the space that's doing things legally. All of these components are getting built exactly like we saw with open source software. And eventually you get to the point where that brings the cost down to the part where the industry flips over. I really think that in the States, this thing about the commissions no longer being a fixed 6%, price competition on real estate transactions is about to start in America in earnest. The possibility for rapid transformation there and the delivery of, frankly, the original blockchain vision, I think it's enormous. And, we have all this stuff about how we handle the standards of evidence and the documentation of the thing. How do you take all the legal documents that back the trust and make sure that every single document is authenticated? All those kinds of processes, we have good mechanisms for doing. Yeah, it's a thing. It's really a thing.
And Federico, I think it's quite interesting that you called home what many in the world would consider to be the design capital of the world, Milan. And now you are calling home, which is where the world looks to for innovation. Speaking of ecosystem growth and ecosystem building, one of the ideas that you shared speaks about how you hope to grow the ecosystems in such a way that more builders, more community participation can happen, not just the land investors and owners, sellers and buyers, but it is an opportunity for a much larger ecosystem to participate. What does Fabrica Land offer today, and what is the best way for our listeners to interact with Fabrica, your project, and contribute in any way they can?
Thank you. That's a great question. So there are two aspects, I think. One is that we help the end user. So I believe that any protocol without user is worthless. So it's a nice white paper. But you really want to bring people on board. And the way to do it is to allow them to do something useful and fun. And so you can just go on our website and buy a plot of land in the US and own it in your wallet.
That's amazing.
That's simple. It's as easy as buying a JPEG. That's what I like to say to crypto people. And all of a sudden you're a landowner in the US. And that's one way to show and be engaged with something that it's so unique and fun to do. And it's not complicated. It's an instant. So that's from a user standpoint. And then the other side of it is like, okay, how does this work? And is it for builders and hackers? Yes, it is. Like, not only we have the open source trust agreement, which is like for legal people, but you can look at how we build the tech stack, and you can say, hey, you know what? I live in another country and I want to be part of this. That's the recipe there to basically create your own validator to bring properties on chain in your specific jurisdiction. And we do our best to cover most of it, but the last mile will be done by someone living in those countries who will go to the specific local offices to understand how title works and connect it to the on-chain asset and take care of the last mile. And I think that's what we offer to people out there, is join us in a collaborative way to make it really a decentralized system that runs all over the world and bring real estate to a digital standard that you can use into any application.
Fede, I have a question actually that I had earlier when you explained a little bit your setup. So you have this token that allows to get, kind of like a transitive ownership of the asset. Do you also transfer potential revenue from the assets, whether it's through rentals or any kind of like business on the land, or do you avoid touching it so far and you kind of like separate the two?
It's a good question. So currently the legal setup says that whoever is in possession of the token basically gets whatever revenue that the property generates. But we're not focused on that. We're focused purely on the title and ownership of the property. So we don't have any mechanism that automatically distributes revenues or anything like that. So it's purely a system to buy properties and prove that you are the owner on new rails. And ownership of a property comes with all the rights and the liabilities of owning a property. And eventually, I think on top of our system, people will build securities. So people will build something that is like closer to the traditional real estate offerings that you see, like tokenized commercial properties with a manager and many owners and so on. And that's a different thing from what we do at a lower level of just mapping the ownership.
I think the flexibility and the opportunities that come out of it, but it all starts with a strong foundation, and that is with the titles and the ownership, and to make sure that is enforceable, recognized, and transferable. I think it's quite fascinating how you described anyone could go to Fabrica.land and buy a piece of US real estate. I think that's fascinating. Vinay, one of the areas that you touched upon earlier on was the opportunities of AI to solve and sift through troves of, let us say, real estate data to find unique combinations that are beyond the capabilities of existing technologies. AI innovation with trust minimized data. Data that has been validated by experts, lawyers. We love them, we have them, and I think all the projects that we have on this call embrace the possibility of policy and legal compliance as being one of the core undercurrents of delivering this reliably to users. Vinay, what are the opportunities that you imagine would emerge out of this AI and beyond?
So, I mean, all of this stuff basically comes down to oracles. Right, the old name for this from the beginning of time is the oracle problem. The token says 3-bedroom apartment in New York. The token is purchased. Somebody goes over there. There's no such property. You've got to figure out who's responsible. So that ability to maintain an accurate model of what's happening in the real world, AI does not have eyes. Right? Even if the AI has a camera, the prospect that the camera could be manipulated in some way, the AI thinks it's getting a picture of one place and it's getting a video feed. There are all of these things, the kind of, Ocean's 11 stuff that make it hard to do electronic monitoring. So in any instance, when you look at a piece of data, there is a possibility the data is in error. And this is the kind of bedrock Mattereum problem, is you want to buy and sell a real world asset, whether it's a Rolex or a gold bar or an apartment. The primal problem is, what is this thing really? Is it actually there? When somebody says they own it, do they really own it? All of these questions about the doubt of provenance, the doubt of legal standing, legal status, all the rest of this stuff, all of that. So when you put AIs into a mix like that, the prospect that people can use AI to produce fake data, which will be consumed by other AIs, by human experts, by smart contracts, we all sort of know that the old world where seeing is believing is kind of gone, but it's still probably half a generation of AI away, to the point where you can casually generate photorealistic pictures of things which already exist but are manipulated in some way, right? Show me this apartment, but make it like it's had a really nice retrofit. Okay, look, the windows look better now and they've put a new layer of coating. Oh, and they did something with the roof too. Yeah, could you change the color of those roof tiles, make them a little more kind of bright red? Oh yeah, okay, cool. So that whole notion of perfectly made fake everything everywhere, this is only going to get worse and worse and worse as time passes. Hey AI, could you make me a 500-page, roughly, documentation packet for a bridge in New York? Yeah, make it run between here and here. Yeah, Hudson to Brooklyn. Okay, fine. Yeah, just make me a bridge. And, then you go around and you sell this fake bridge to people. The arms race between human beings and AI for the ability to produce perfect fake, nobody doubts that humans lose that game. Right? And then you say, we're going to use AIs to check all of that stuff. It's like, are you now? Is that going to work? How did spam filtering go? Did spam win or did spam filtering win? Well, kind of spam won. So the expectation that I have, at least, is that we wind up with the blockchain being used as the source of truth for basically everything in the material world, because anything that doesn't have a hash on a file from some kind of source that you trust, unreal. And then how do you know that those sources are trustworthy? Well, if I can prove one of them faked something, they should pay me compensation. Right?
So,
and all of this, the Mattereum Asset Passport, because we are seen a lot of change over the years, shall we say, the Mattereum Asset Passport certainly works to do things on the blockchain, but it really works in an AI environment. So we take, a large complex building project. Okay, there's a trust which contains the title on the property. That's great. There are then 75 different kinds of data that have to be verified and validated. Layer that stuff into a Mattereum Asset Passport. One of the claims is the property is in a trust. Set of people come and provide warranties on that data. That's kind of how you would take the sort of asset transfer technology from Fabrica, and then you would apply the asset definition technology from Mattereum. And that as a combined product, you kind of take that out to the world of AI and, hey, you want to buy an apartment, it really exists, or do you want to take your chances that all the product pictures you're being shown of that apartment are nonsense? Imagine things like Zoopla, What is Zoopla going to look like after AI is essentially perfectly able to fake things? Hundreds of thousands of fake properties. It's going to be like social media profiles on Twitter, but for houses that don't exist. It's going to be crazy, right? And all of that stuff, we're not talking 5 years of transformation. We're talking like middle of next month. Yeah, middle of next year for sure, you're going to see just this gigantic sea of fake everything everywhere. Nobody knows how to stop it. Everyone knows it's coming. And that, I think, is the moment where the blockchain goes from being kind of like, everyone used to say, but what technology does the blockchain solve? It seems like a problem in search of a problem. It's like, oh, well, the problem arrived. The AI guys are here.
I think it's a perfect blend of opportunities when you merge blockchain and AI. And I think that is one idea that the community has been super excited about, but we are still waiting for those runaway ideas or implementations. Mm-hmm. One very interesting story that is also emerging parallelly in Silicon Valley, Federico's backyard, the way OpenAI is signing massive deals to access data from Reddit, to access data from various sources so that their LLM is trained on data sets that is unique. There is a land grab of sorts happening for information that is valid and unique. And I think that is a unique opportunity. And I'm glad you mentioned the Mattereum Asset Passport, Vinay, because the depth of information that comes with the Asset Passport, the template documents, the constant evolution and updates that it warrants, the certifications, insurances that comes with it, it's a unique opportunity that allows an AI assistant to guide you in that journey where, in a world where anyone can make anything, who do you know to trust? And trust is why code is law, and all of us are crypto natives and we believe in that blockchain story. And creating trust layers to bring real world assets on chain in a way that everyone can get behind. And like Nelson mentioned, the ability to have dynamic choice, to have fluidity, to have the ability to go where your heart takes you, to pursue your passions is the opportunity that this brings. Okay, I think we are about ready to wind up. I'm just going to go around and let everyone share their parting thoughts and ideas, inspirations, any shills, everything is welcome. So, Nelson, starting with you. I missed a proper introduction, but this is a great opportunity for everyone to know where they can find you and how they can get in touch with you. One quick hint for our listeners, Nelson is one of the best places to reach Nelson is on Mattereum's social and community handles on Telegram. Soon in other places as well, but Nelson, over to you.
Thank you, Praveen. Many thoughts. So first, we're going to be in Prague for ETH Prague. It's going to be very interesting. So if you're around, come and talk to us. We can talk asset passport, we can talk land regeneration or smart villages, network tech, all of this. This is going to be great. The other thing is, if anybody is interested in building kind of like protocols for people to invest at scale, kind of like a massive real estate fund for land regeneration, I'm exploring a lot of those ideas, especially around restaking, around tokenomics models. So there's a project brewing around that. So if you want to talk to me about this, this is the moment. The other thing is that I'm in Barcelona. We have a Crypto Mondays meetup every week. So if you're part of the committee or just visiting the city, this is where you can find me. And otherwise, on all the socials are known as Computer Poets. So let's talk.
That's wonderful.
And Nelson is very much almost like our internal customer. Like before Nelson kind of formally joined Mattereum, he'd be just like, okay, when can I use this thing to go and do large-scale regenerative community? When is it ready? When is it ready? When is it ready? Eventually, like, okay, help us get it ready.
you need a Nelson in your team to keep you on track and moving fast.
And also to give us some sense of optimism, because I mean, one of the things that makes Mattereum what it is that we have a lot of very grim people. Anton, my managing director, used to do infection control in prisons. I used to work on worst case scenarios, also pandemic epidemiology. The hardness of the grip on the problems of the real world comes at the price of being the kind of people that approach any situation with like a large wrench. We're just going to tighten this thing down, right? So the kind of lighter touch of like, okay, cool, you guys just take care of that, but now we're going to make something interesting and beautiful happen with that grip. You go tighten the bolts, we're going to go build the party. You need that mix of perspectives to get something that isn't just a sort of bare technocratic function.
Yeah.
You need something other to do with these tools other than to just solve problems. You also need the ability to create new things.
While you keep saying that in different ways, Vinay, that the Mattereum team can be grim, have got a different perspective, but I must confess that in my time working with the Mattereum team, they've proven to be some of the most fun, entertaining, and great people to work with. So I don't know who you're talking about, but I'd love to meet them. That said, Federico, there's so much excitement and ideas brewing in the space, but I noticed that you have made inroads with TradFi investors, communities who are foraying into blockchain. What's happening at Fabrica Land, and what should we be looking forward to next?
Thank you. Well, first I want to say, like, most people don't know what real world assets are yet. And when they hear the words these days, they talk about treasury bonds and so on, and like still like very remote things from everyday people. Like the reality is that real world assets are around you, and that's what we're bringing on chain. And we're making it easy to own them and use them in a fun way. We're ready for that.
Absolutely.
So to that, my call is like, if you want to own some land, come to our website and buy a plot of land. If you own some land, put it on chain. The first property, we'll give it for free. Like, just come to our website. It takes 5 minutes and you have your property on chain. And it's beautiful, and have fun with it and play with it and experiment with it. So, and that's one thing that I wanted to say. The second one is, like, if you have some crazy real estate ideas of a next business model, but it cannot be built because it's too difficult to do on paperwork, talk with us. We'll give you the digital primitive and you go and build your unicorn. Really.
That's a call to action anyone can get behind. I really like how some of the core narratives around Fabrica has been around breaking down walls, getting people out of areas that were once gated communities to create a democratized access to real world assets and parcels of land. I really like how some of the community literally asked their DAOs and their groups, what do you want us to do with this piece of land? And here's an aerial shot of it. Look forward to more interesting news out of your team, Federico, and thank you again for joining us. Before we wind up, I just want to do a quick update for the community and our listeners that the Mattereum token, the Mattereum GmbH token, is now available for sales. It's in the stage 1 process, open until the 4th of July. And the Matter token, once you hold them, it also gives you an opportunity to discount real estate assets when you list them, when you tokenize them, and when you certify them. Vinay, could I trouble you for a quick breakdown of how the token works when you're working with real estate tokenization?
Yeah, sure, absolutely. So the way that Mattereum operates is it charges fees. Unlike many businesses, we have a very straightforward model. You want to do stuff, we charge you money for it. So that very straightforward model applies to all kinds of different assets, pretty much anything. It averages out to about 1% of the value of the asset. Sometimes more for something, sometimes less for others, but ballpark 1%. So the way that the token works is that you can prepay 50% of the fee with 50 tokens. So for a huge asset, the fee would be large. For a small asset, the fee would be small. One way or the other, you could pay for half of the token, half of the fee with 50 tokens. So it's essentially a coupon or a voucher for future transactions. And that as a model turns out to be relatively well behaved legally in the EU and in other places. So the tokens are on sale. You go to mattereum.de. If you are not in the UK and not in America, it will show you the details how you buy the tokens and how all that works. I will note the token is subject to terms and conditions because we have lawyers that make sure that things are proper and they need someplace to put all the information that tells you the rules of the game. The sort of way that we imagine these tokens working, and I think this is a generally useful mechanism, is just that the higher price the asset is, the bigger the utility of the token when it's used. So the tokens will tend to be used on the assets which are largest and most important, and exactly how that will work over time is, the tokens will just be deployed in the places where people get the most useful discount from them. So it provides a way for us to basically subsidize people bringing new and expensive assets into the Mattereum ecosystem. It is definitely a token that was designed for maximum compliance. So there are a lot of features that people expect from tokens these days, like, oh, where's the buyback scheme, and where's the this, and where's that, and where's the next thing? It lacks a lot of those features because if you put those features in, your token turns into a security. And all of these kind of questions about exactly how tokens are regulated, you kind of want a token which has a very simple, very clear model, so that if you are some kind of larger entity and you want to have a really clear understanding of the legals, it doesn't take you 3 years and $3 million to figure it out. So it's a nice, clean, clear, simple thing. But I will warn token buyers, it doesn't do some of the things you might expect from a token because it is intended to be very compliant.
It's a token that does its job and very little else. And I think that's something that is a certain amount of pride in saying that. I must also mention that the token is not available to residents of the United States and UK. So that is another factor to consider. That said, the fact that the team is going to be at leading events in Europe and soon to be in other places around the world, we look forward to seeing you there and staying connected. The hope and ambition for the real estate tokenization journey and story is that it is one of the key areas that will bridge the gap between the real world. When we say the real world, not just users, but also government, policymakers, decision makers around the world. Crypto can demonstrate fantastic use cases that work, that can solve some of humanity's greatest problems through the effective use of real estate tokenization. So let's look forward to that. And I hope that this conversation has inspired you to explore this space, explore the projects that we mentioned today. And we look forward to staying connected with you. Thank you again for joining us for episode 2 of the Future of Stuff podcast. We'll see you next time. This is me, Praveen, signing off. Thank you, everyone. Thank you.